All right, let's get a little alphabetical, right? So one of the more popular, or common, I should say, and popular trade on patterns is a double bottom chart pattern. And they're more common than a lot of other types of chart patterns and double bottoms and double tops. But let's talk about double bottom chart pattern. Basically, it's going to look like the letter W, right? And what's happening is you have a downward trend and it's retesting of these lows at the bottom of the W. And the idea is it's going to predict a price breakout. It's going to break out of that trend or reverse out of the downward trend and going to break out to the upside. That's the idea, is under certain conditions we're now going to break out to the upside. So let's look at that and how those form and how we can trade off of those. So if we look at this example, this is, all the prices high to low, made into a line chart here. And it looks like a W. Do you see the W there over on the left there? And the idea is that it's retesting of the lows is the idea. So, and they will predict the price breakout to the upside under certain conditions, as we mentioned. So, look, if you see the double on the left, if not, here you go. You can kind of see how the W is forming. So you can see the prices were higher, they go down, then they bounce up, and they go down, and they bounce up again. So that's the idea of the W part of it. Now let's talk about how do we trade this. I mean, so we see a W, that's nice, but how does this really work, right? So if you see, we're starting with a downward trend. So over a double bottom, it's a downward trend and it's going to reverse is the idea. So you're going to hit bottom basically twice. Think of like those would be, we could have drawn a support line along the bottom, but you can see where the prices hit the first bottom and then they back up into the middle of the W and they reach a peak and then they go back down to the bottom, forming, the next side of the W. And then after that, they go back up. So that's our double bottom, right? Once we've hit the bottom twice, we've now formed our double bottom. And what we're looking for is now it's going to hit that confirmation point. You could also call it a resistance line. If this was a rectangle, it would bounce off that resistance point and keep going back down and kind of trade with a narrow channel. But when we have a double bottom, it's actually going to break through that point right there after the second bottom. And that's your confirmation point. Once it's broken through there, a new trend is forming, and you used your upward trend type analysis, in a second touch, or you now have when we look at drawing trend lines. But the idea is that's your confirmation point that is broken through that top of the middle part of the W. You can see where I drew this line straight across, and then you're buying there after it's gone up above it a little bit, maybe over a period or two or three, and you're now going to ride this uptrend. And it's very common for a pullback to happen then. So we've been on this long downtrend, hit bottom twice, broke through at the top, and now it's reversed from a downtrend to an uptrend. But there's a little bit of pullback, a little bit of profit taking, not unusual, actually very common, and it'll actually maybe dip below that confirmation point. But the idea is hang in there because the idea is it's going to then continue with a double bottom. It's going to continue on that uptrend. It may just keep going on that uptrend, but having a pullback with profit taking is not unusual. And that's okay, just be aware. So when we buy in there, we can then ride that uptrend up, and we can sell at the top there if we want to take a short-term profit. But the idea of a double bottom is we're maybe looking for that upward trend. So for a double bottom, there are some conditions to be met, some generally accepted conditions. And typically you're looking for a minimum of 10 days between the lows. Now it could be months, so this is a longer type of chart pattern. I suppose you could trade it over, shorter periods, but traditionally you're looking at days, so it's a day type trading over days, a minimum 10 days between the lows, so between those two bottoms. And it could be months if you're looking at longer patterns. And the variation between the lows is no more than 4%. They truly are within each other, very narrow, or very, like if you draw a line along the bottom there, they're very close to that support, it would be support line. So there isn't it actually looks like a W. It doesn't look like something, like a lightning bolt that keeps going downward. It looks like a W that's formed there. And then that center up move, is a minimum of 10% from the lower of the two bottoms, right? If it just goes up a couple of percent, you got this really funky looking W. That's not it, right? So it needs to move up 10% from the bottom and really form, it may not be a perfect W. Nothing's, it's not going to look visually perfect, but it's going to look very clearly like a W is the idea. And then the price must move above the confirmation line. That's the important part of a double bottom chart pattern. It's got to break through that confirmation point to show a true reversal. Even though there might be a pullback later, it's got to break through significantly through that confirmation line. So, you're looking for that as well. So when you're looking to trade on a double bottom, you need to make sure that these conditions are met along the way. But it can be a very powerful pattern to trade on.